Good evening. This is Tom Alexander. It is Sunday, March 30th. It is about 6:16 p.m. Eastern Time. I am traveling and I am on my laptop. I'm having some technical difficulty, so hopefully this goes as planned. Real quickly, I am not going to have as much verbiage in the written report tonight as I typically do. I'm going to put the verbiage in this recording. However, you can go to my website, go to alexandertrading.com here and click on weekly update. Click on weekly update. This is free. You can go to the weekend report for this weekend. You will see the charts with the levels that I'm going to go over in just a minute. And then if you choose, you can look at previous weekend reports. All of this stuff is free. So all you have to do is go to the website, alexandertrading.com, click on weekly update, and then here are the reports for weeks going back at least a couple of years. Okay. Now, there is a lot to discuss. It is 6:17 Eastern Time. Globex is open. What you're seeing on my screen are the four futures contracts of the primary U.S. trading indices, and we've gapped down, which is interesting. Now, I'm going to go through each of these. I'm going to go through the cash markets because the cash levels are the ones that I encourage you to watch and really follow during the day. It is the cash levels that validate moves, and you can trust the development that way. It's a more consistent way to follow the development now, even though, we all trade the futures. I get that. Now, a couple of things that are obvious from this chart. First of all, even if the NDX had not gapped or the NQ had not gapped lower, the NQ/NDX is very close to taking out this early March low. It looks like if things hold here, it looks like that's going to happen. Now, the other indices are lagging behind in various stages, followed the NDX NQ is followed very closely, obviously, by the SPX ES for obvious reasons, the Mag 7 debacle, et cetera, et cetera, et cetera. The Dow is holding up relatively well. The Russell is holding up relatively well. Now, those are not the only indices that are holding up relatively well. Let's take a look over here. Now, again, I have these charts all posted in the member website with these levels on there, so you can access them there if I'm going to quickly tonight, but I want to run through this. Let me find, okay, here's the SPX. Now these are the cash markets, obviously. Now the level to the upside would be Thursday's cash close. That's the important level. If we close above Thursday's cash close in all the indices, an important low could be in place. Otherwise, I'm expecting to see at least the NDX trade to a new low this week. Now, we have the big tariff tizzy going on, and that supposedly culminates with an announcement on Tuesday. There'll probably be hangover and some digestion of whatever is said, isn't said, interpreted, not interpreted on Tuesday. That will carry over very easily into Wednesday, could be later. However, I would expect that by Wednesday or Thursday, we will have seen an important low. Now, that low may be 2 or 3% lower or 5% lower, but I think we're heading in that direction. If the SPX, for instance, this is the recent low. This is the mid-March low here at about 55.04. Below that level, you're looking at about 5,400. That's the next auction market level to the downside. That's the SPX. And then if we look at the NDX, which is obviously extremely close in terms of structure, it did not quite take out the March 13th low. On Friday, came very close. Below this level is about 18,400. Now, I'm not suggesting if below 19,153 that we're going to trade to 1840. I'm just suggesting that is the next potential level. It could stop anywhere in here. And frankly, it's just as likely to stop anywhere in here as it is here. This is just the next auction market level, okay? Now I want to show the RSP. This is the equal weight. This is an ETF. It's an equal weight S&P, and you can see it's showing a lot of relative strength basis the SPX. Again, for obvious reasons, we don't have the cap weighted heavy influence of the Mag 7. Okay, let's take a look at, let's go to the Dow. And the Dow was holding up really well relative to the NDX SPX. And then the Russell is showing relative, it's about in the same position, maybe a little bit of relative strength. And here are the levels highlighted on the chart. And then the New York Composite is showing a lot of relative strength as well. So it's a mixed picture from a structural perspective. You know, we're not seeing, in my mind, desperation / panic that typically that you ideally see at good substantial lows. Now, that said, maybe that good substantial low is going to follow some sort of at least short-term face ripping rally that begins by Wednesday or Thursday of next week. And in the meantime, you have a non-confirmation with maybe the New York Composite and or the equal weight S&P not going to a new low, or maybe the Dow or something like that. But the stage is set here for the divergences among the indices to occur with a low, which is something you almost always see at significant lows. That's why I'm pointing this out. All right, let's take a look at the internals. Internals are also rather interesting. Now, the red line is a 10-day moving average of NYSE advancing issues. The green is a 5-day moving average of advancing issues. The blue is a histogram of breadth. You can see breadth has been negative 4 consecutive days. You're starting to push the envelope. Now, back over here, we're negative, what was that, 6 or 7 consecutive days? Certainly, if we're negative into Tuesday, you're going to be, it's going to be rather extreme by this particular measure. Also, we could very easily here see we could have the SPX trade to a lower low, and then we have some sort of divergence in these the moving averages of NYSE advancing issues. Or if we just get a washout, maybe we take out this level, which is a sort of a mild extreme, and get even more extreme. And I talked about this. You can go back, and this is one of the benefits of the archive of the weekly updates that you can avail yourself of if you choose. You can go back and you can see what I was saying the weekends of when this was occurring. And I did a lot of talking about this 10-day moving average of advancing issues. Now, even more compelling than this is VIX. And VIX spiked rather dramatically on Friday, but it is still well below the levels that we saw back in mid-March. So it's possible that VIX does, I mean, there's plenty of room for VIX to go higher without taking out this 28 level. That would set up another divergence and could be considered bullish, potentially bullish. Now, it's obviously going to depend on price action, but if we do get 2 or 3 days of really hard selling here, I think we're putting in a low. If we just turn around on a dime on Monday, maybe there's a low in place. Let price action be your guide. Right now, the drop dead level, and this will be lower as the week goes on and as each day completes. But the drop dead level for a bearish case is Thursday's cash session close. If the indices, for whatever reason, turn around now and have a dramatic rally and close above Thursday's cash session close, a low of some relative significance is likely in place. Okay, guys, I'm not sure I'll get this on YouTube. If I do, please like and share it. If I don't, I hope you've enjoyed it, found value in it, and I will speak with you again soon.